Hey, Mike. Yeah, I mean, the silver market is in absolute turmoil right now. It's sort of breaking before our very eyes. And so I want to cover some of the developments here. The first thing we have is a tweet from Zero Hedge. Dear silver shorts, are you panicking yet? And look at this. You can see that the silver lease rates have exploded to 33%. This is absolutely insane. When we covered this a week ago, it was about 9% or 12%. 33% now. This is unbelievable.
Yeah, one of the things that I want to point out is that this is a long-term chart. I've shown charts recently in a few of the videos that I've done, but they didn't go back 7 years like this. This one shows that normal is somewhere right around zero. I mean, nothing. Varying between maybe minus 0.5% or even 1% and plus 1%, right? That's the normal thing. Yep. Less than plus minus 1%, but there's sometimes where you're getting paid to take it, right? And then suddenly we're up at what's it peaking at there?
33%, 33.5%.
Wow, amazing. I mean, imagine your home mortgage suddenly jumping to 33%.
Can't do it. Yeah, this is the sign of a market breaking before our very eyes.
Right. So you add this, all the shorts are having these huge losses in the first place, and then you add this to those losses, and it's a compounding effect that really puts them. They're painted into a corner, and the only way out is to cover their positions, which means buying silver on the open market and returning the ounces that they borrowed and sold, that they are now paying 30% premium on. Jeez. Okay.
Yeah.
Let's move on.
Yeah, exactly. But there is no physical, and that's kind of the main problem behind all of this. So across India, not even a sliver of silver available. And, the prices are growing rapidly, and buyers are even offering a premium, but the metal remains out of stock. So there just simply isn't enough physical. That's the problem here.
This is what I talked about when I talked about the metals becoming unaffordium and unobtainium. It's actually stages. And we're going through that right now. They can't obtain it, and so they're offering more than what the official exchanges are saying that the real price is. Well, that price that they're quoting isn't the real price if everybody is willing to pay more.
Yeah, exactly. And this is causing a problem where India funds halt silver ETF investment amid unprecedented global shortage. So, unprecedented shortage in the physical silver market, and a number of Indian asset managers have halted all new investments into silver ETFs because they just simply can't get the physical. This is a huge problem.
Yeah, well, two things. This is manipulation, but they've got an agency just like our CFTC or the SEC, and so those authorities can manipulate the price by not allowing you to buy. If you've got one of their ETF accounts, suddenly you can't add to your position. No matter what happens, you're just frozen out of being able to buy in that method. And the other thing is, do you really want to be involved in any of these funds? SLV, GLD, if they can do things like this to you. I wouldn't touch them with a 10-foot pole.
Yep, me either. And isn't this what happened in 1980, right? That's how they capped the price of silver. They said sell orders only, liquidation. Yeah.
Yeah, that's how they broke the Hunt brothers, right?
Yeah. So it's like, to me, the solution is obvious. Get physical as quickly as possible, get it in your possession, and just wait. Yeah, so simple. So China's raw silver is at $59 per ounce. The physical market takes control. So Shanghai just flashed a huge signal. Raw physical silver trades above $59 an ounce, while COMEX sits around $51. That's an $8 premium, a gap you can't ignore. So yeah, $8, that's pretty significant from east to west.
Yeah, that causes an arbitrage opportunity, and you'll be seeing a lot of silver flowing from the west to the east, which is very sad that, in the west here, a whole lot of people, just normal people, are selling because they go, oh, well, silver's at an all-time high. Well, it's not. Inflation adjusted, silver is we just did an exercise recently where if you were using $1980 to purchase silver today, the price is $12. That's the 1980 price of today's silver is $12 an ounce. It has so far to run. It is insane. And people think that it's at this high that they're going to capture this, and they have no idea where it's going. So, okay.
Hey everyone, Mike Maloney here. And yes, you're absolutely right. The silver market is in absolute turmoil. It's not just another correction or rally. It's breaking right before our eyes. Things are happening right now that most investors have never seen in their lifetime. And quite frankly, this is the kind of stuff they'll write about in the financial history books. Let's start with what lit the fire this week. A tweet from Zero Hedge. It read, "Dear silver shorts, are you panicking yet?" And underneath it, a chart showing silver lease rates exploding to 33%. You heard that right, 33%. Just a week ago, those same rates were hovering between 9 and 12%. Now, they've shot up threefold. That's not volatility, that's a signal of something structurally broken. Now, for anyone who doesn't live and breathe this stuff, let me explain what that means. Normally, lease rates for silver, the interest rate to borrow physical metal, hover around 0. Sometimes a tiny bit above, sometimes below. Think plus or minus 1%. It's boring. But when lease rates spike like this, to 10%, 20%, 30%, it means there's no metal available to borrow. It means someone's desperate to get silver right now, at any cost. Think about it like this. Imagine your mortgage suddenly jumps from 5% to 33%. You'd panic, right? That's what the shorts, the big banks and funds who've been shorting paper silver, are feeling right now. They've borrowed silver, sold it on paper, and now they have to buy it back to deliver. Except, there's no silver available. None. So, they're paying through the nose to lease whatever scraps are left in the system. It's the financial equivalent of a heart attack. And it's not just a paper squeeze. This is spilling over into the physical market. Across India, not even a sliver of silver is available. Wholesalers are completely out. Buyers are offering premiums just to get their hands on metal, but it's still out of stock. The demand is off the charts. I've said for years that silver goes through 2 stages when a real crisis hits. First, it becomes unaffordium, when the price skyrockets. Then it becomes unobtainium, when you literally can't find any. We're entering the unobtainium phase right now. People in India, China, and even parts of the US are discovering the same thing. The official price means nothing if you can't actually buy the metal. If everyone is willing to pay more than the so-called spot price, then guess what? The real price is higher. And that disconnect is now breaking the paper system. Look at this headline. India funds halt silver. ETF. Investments amid unprecedented global shortage. You heard that right. Major Indian asset managers have stopped accepting new investments into silver ETFs because they can't secure the physical silver to back the shares. Think about what that means. People want to buy exposure to silver, but the funds themselves can't find any. That's not just tightness, that's a shortage on a planetary scale. Now, here's the scary part. Regulators in India are calling this a precautionary measure, but let's call it what it really is. Price control. When the system can't deliver, they stop people from buying. It's the same playbook they used in the US in 1980 during the Hunt brothers saga. When silver started to run, the exchanges flipped the switch to sell orders only. In other words, you could sell your silver contracts, but you couldn't buy new ones. That's how they broke the rally. And you know what? The same manipulation is still alive today. These institutions don't want a free market. They want a controlled illusion of stability. And when that illusion starts to crack, they pull the plug on liquidity. So here's my advice to everyone watching. If you don't hold it, you don't own it. ETFs like SLV or GLD are great on paper until they aren't. When governments or fund managers can freeze your ability to buy, that's not ownership. That's custody risk. I wouldn't touch them with a 10-foot pole. Now let's talk about the other major signal flashing red. The East-West arbitrage. China's raw silver is now trading at $59 per ounce, while COMEX, the US futures market, sits around $51. That's an $8 per ounce premium. $8. That's unheard of. This gap is so wide that traders are now literally shipping silver across the ocean to take advantage of it. Cargo holds of transatlantic flights are being booked solid with 1,000-ounce bars flying from New York and London to Shanghai. Bloomberg even confirmed that hedge funds are renting air freight just to capture the spread. This tells you one thing loud and clear. The physical market is taking control from the paper market. The paper markets, COMEX LBMA, are supposed to set the price. But when the price in Shanghai is $8 higher, that's the real market telling you where silver actually belongs. The East is dictating the price now because they're demanding delivery, not paper promises. And while traders are scrambling to move metal eastward for that profit, it's draining the vaults in the West. London's already dangerously low. India's dry. The US inventories are falling every week. The silver's flowing east, and it's not coming back. Here's the tragic irony. Western investors are selling at what they think is a top, while Eastern buyers are scooping up every ounce they can get. It's like watching a fire sale of civilization's real money. And it's all based on a misunderstanding. Yes, silver hit a nominal high, but not an inflation-adjusted one. Adjusted for real purchasing power, silver would need to be over $200 an ounce to equal its 1980 high. If you were using $1980 to buy today's silver, the price would be about $12. 12. That's how undervalued silver is. So while Americans are selling at $50 thinking they're locking in profits, Chinese and Indian investors are buying like there's no tomorrow, because they know the real price is still absurdly low. Meanwhile, Bank of America, the same people who never saw 2008 coming, just released a report saying silver might hit $65 by next year. 65? I couldn't help but laugh. These are the same analysts who think the London market's state of seizure can be papered over with a few press releases. They're living in the past, using old models that assume infinite liquidity and rational actors. But markets aren't rational, they're emotional. And when emotion meets scarcity, price doesn't just move, it explodes. And that's where we are right now. The emotions shifting from apathy to panic. When you add 33% lease rates, no supply in India, halted ETFs, and an $8 premium in Shanghai, that's not a market correction. That's a systemic failure. And like I always say, this is the point where silver becomes both unaffordium and unobtainium.